Join me as I take on the challenge of building a sustainable investment portfolio from scratch and see if I can turn it into a wealth-building machine. Sustainable investing is a concept that's been gaining traction in recent years, and for good reason. As we move forward in this rapidly changing world, it's become increasingly clear that our financial decisions have a profound impact on the planet and its resources. Today, we're going to dive into the world of sustainable investing, exploring its significance in shaping the future of finance and wealth building. Traditional investing methods have long been criticized for their focus on short-term gains, often at the expense of environmental and social responsibility. The consequences of climate change, social inequality, and corporate malfeasance have become too great to ignore. We've seen the devastating effects of pollution, deforestation, and exploitation of natural resources. The financial sector can no longer afford to turn a blind eye to these pressing issues. A shift is necessary, and sustainable investing is leading the charge. The question is, what's driving this shift, and why is it essential for our collective future? For one, sustainable investing acknowledges the intricate web of relationships between the environment, society, and the economy. It recognizes that long-term financial returns are inextricably linked to the health of our planet and its inhabitants. As investors, we have a responsibility to ensure that our money is working towards a better future, not perpetuating harm. The challenge lies in reconciling financial performance with social and environmental consciousness. It's a tall order, but one that's becoming increasingly important as we navigate the complexities of the 21st century. The writing is on the wall. The days of reckless, profit-driven investing are numbered. The consequences of ignoring environmental and social concerns are too dire, and the benefits of incorporating these factors into our investment decisions are too great. By doing so, we can unlock new opportunities for growth, mitigate risk, and contribute to a more equitable and sustainable world. So, what does sustainable investing look like in practice? There are several strategies and approaches that investors can take. One popular method is to incorporate environmental, social, and governance (ESG) criteria into the investment process. This involves assessing a company's performance across these three dimensions to gauge its overall sustainability. Impact investing is another approach which seeks to generate both financial returns and positive social or environmental impact. Examples of sustainable investments. Let's talk about some specific companies leading the way in sustainable investing. These examples demonstrate how this approach can achieve both financial and ethical goals. NextEra Energy, one of the world's largest producers of renewable energy. NextEra Energy has made significant investments in solar, wind, and battery storage technology. Their commitment to transitioning away from fossil fuels has made them a standout in the renewable energy sector, offering both long-term profitability and environmental sustainability. Investing in NextEra means you're backing a cleaner future while also benefiting from their continued market growth. Ørsted. This Danish company has gone through a dramatic transformation, switching from fossil fuels to becoming a global leader in renewable energy, particularly in offshore wind. Ørsted's pivot to sustainability has paid off financially, as they now lead the charge in reducing global reliance on coal and natural gas. Investors in Ørsted are not only supporting a cleaner planet, but also positioning themselves in a growing industry. Beyond Meat. Beyond Meat is disrupting the food industry by providing plant-based meat alternatives that aim to reduce the environmental impact of traditional meat production. Agriculture is a significant contributor to greenhouse gas emissions, deforestation, and water usage. By investing in Beyond Meat, you're supporting a shift toward more sustainable food systems and tapping into the growing demand for eco-conscious food alternatives. The role of ESG and impact investing. ESG criteria can help investors identify companies that are actively working to reduce their carbon footprint, promote diversity and inclusion, and maintain strong governance practices. This can lead to more informed investment decisions, as well as the potential for long-term outperformance. Impact investing, on the other hand, targets specific social or environmental outcomes, such as renewable energy, education, or healthcare. By channeling capital towards these areas, investors can drive positive change while still earning returns. One of the most compelling aspects of sustainable investing is its ability to uncover hidden opportunities and mitigate risk. Companies that prioritize sustainability are often better equipped to adapt to changing regulatory environments, consumer preferences, and shifting market conditions. This can result in more resilient investments and reduced exposure to negative outcomes. Moreover, sustainable investing can foster a sense of purpose and alignment between an investor's values and their financial goals. In another example, companies like Patagonia and Seventh Generation have made environmental responsibility a core part of their business model. By investing in these companies, investors can support sustainable practices while also benefiting from their financial performance. The key takeaway is that sustainable investing is not only a moral imperative, but also a sound investment strategy. Conclusion: sustainable investing is more than just a buzzword. It's a critical step towards building a more equitable, environmentally conscious, and financially resilient future. As individual investors, we have the power to shape the direction of the market and drive positive change. By aligning our portfolios with companies like NextEra Energy, Ørsted, and Beyond Meat, we can contribute to a better planet while achieving solid financial returns. Share your thoughts on sustainable investing in the comments below. And if you're interested in learning more, be sure to check out our related video on sustainable investing for beginners.